What I need to tell you tonight starts on a very specific, very quiet morning, April 5th, 1933. Most Americans woke up that Wednesday thinking about simple things: how to put food on the table, whether they still had a job to go to, or if the bank down the street would open its doors. They had absolutely no idea that by the time the sun set that evening, the fundamental rules of their existence had been rewritten. Owning gold, a constitutional right that had existed since the founding of the nation, a practice as American as the soil they stood on, would suddenly, violently become a federal crime. Think about the weight of that. 10 years in federal prison. But stay with me. Do not click away. Because while everyone talks about gold, there is a much darker, much more relevant chapter of history that almost nobody discusses. And here is the part that should send chills down your spine if you own silver today. What happened to gold in 1933 happened to silver the very next year. Executive Order 6814, signed August 9, 1934. The government didn't ask nicely. They didn't request your patriotic duty. They demanded that Americans surrender their silver bullion to the United States Mint within 90 days. Same penalties, same coercion, same outcome. Now, make no mistake, I am not here to tell you that the government has signed a confiscation order for 2026. That would be false, and frankly, it would be irresponsible reporting. I deal in facts, not fear-mongering. But what I'm going to show you today is a historical pattern, a blueprint that every single silver holder needs to understand. Because the mechanisms that made confiscation possible in the 1930s are being rebuilt right now, just in a completely different form. The next confiscation won't look like federal agents knocking on your door at midnight in trench coats. It won't look like armed soldiers escorting you to the bank to empty your safe deposit box. That is the old way, the analog way. The infrastructure being constructed today is far more elegant. It is digital, it is invisible, and it is far, far harder to resist. Let me explain why this matters and why the history you think you know is only half the story. To understand the threat today, we have to understand the desperation of yesterday. In 1933, the United States was in the death grip of the Great Depression. This wasn't just a recession, it was an economic apocalypse. Real GDP had collapsed by a devastating 29% in just 4 years. Imagine nearly one-third of the country's economic activity simply vanishing. Unemployment had exploded from about 4% in 1929 to 25% by 1933. Walk down any street in America, and 1 out of every 4 men you saw had no job, no income, and no hope. Between 1930 and 1933, nearly 7,000 banks failed. That's roughly a third of the entire banking system gone, evaporated overnight. Life savings were wiped out in an instant. People were terrified, and when people are terrified, they seek safety. They were pulling their money out of the remaining banks and converting their paper dollars into gold because they no longer trusted the financial system. 1933. They wanted something Most real. Americans woke up that Wednesday tangible, thinking about simple things. And here is the crucial detail you need to grasp to understand the government's motivation. The bank down the street would open its doors. The dollar was strictly backed by gold. They had absolutely no idea that by the time the sun set that evening, the fundamental 40% gold backing had been rewritten. Every federal reserve note in circulation. Right. This was that had existed since the founding of the nation. When people started hoarding gold, as American taking it out of the soil they stood on, it under their floorboards, suddenly, violently, essentially become a federal crime. Think about the weight of that money. 10 years in federal prison. The Federal Reserve couldn't expand the money supply to stimulate the economy. Because it didn't have enough gold in the vaults to back that there is a much darker, the economy was strangling chapter of history. This is why President Roosevelt issued an executive order that sent chills down your spine if it wasn't really about punishing hoarders. What happened to gold in 1933? It was a cold, calculated monetary operation. Executive Order was about removing the constraint on August 9, 1934, by forcing citizens to exchange their gold for paper at the official rate of $20.67. They demanded announced that Americans surrendered their silver bullion to the United States Mint within 90 days. Federal Reserve. Same penalties, and then came the real betrayal, the part history books often gloss over. Mistake, the part that proves this was a wealth transfer, that the government has signed a confiscation order for 2026. The Gold Reserve Act of 1934 immediately raised the official gold price from 20.67 to 35 fear-mongering. Think about what I'm going to show you today is citizens who had dutifully turned in their gold just months earlier. Single silver holders, the government effectively devalued the paper dollars the mechanisms that made by nearly 70% possible overnight. In the 1930s, the gold they surrendered was now worth 69% more completely in dollar terms. The next confiscation won't look like federal agents knocking on your door at midnight. More than 2,600 metric tons of armed soldiers escorting you to the bank to empty your safe deposit worth in today's prices. That is the old way, from private hands to the state. With the stroke the infrastructure being constructed today is far more elegant. It is digital. It is invisible. Most people who talk about the 1933 confiscation stop at gold. Let me explain why this matters and why the history you Executive Order 6102 was about the story. Who was to understand the silver confiscation came later, the desperation of yesterday differently. In 1933, the United States was in the death grip Executive Order 6814. This wasn't signed just a recession. August 1934. Economic apocalypse required the delivery of silver bullion to the government by a devastating 29%. Circulating silver coins were exempt. Imagine nearly one-third of the country's economic activities importers out of everyday commerce. Unemployment had exploded from about 4% in 1929 to the bars, 25% by 1933. The real wealth. Walk down any street in America because the silver out of every four men you saw had no job, had a specific goal, and no hope. Increase silver between 1930 and 1933. The combined value of gold and silver reserves banks failed. They needed raw material to mint more coins, a third of the entire banking system. To further expand the money supply, evaporated overnight. Here is the key number: life savings approximately were wiped out in an instant. 13 million people were ounces of silver were surrendered under that order. They seek safety. The government paid pulling their money out of the remaining banks. Now you might hear that converting their paper dollars into gold. Because they no longer trusted the financial above the depressed market rates. They wanted something real. But here is the something tangible. If you made the crucial detail you need to grasp to understand the government's motivation. The 50% at that time, the dollar was strictly backed. The entire operation was designed to funnel hard assets from private hands into government gold backing, compensate every Federal Reserve note in circulation, tax away their profits. This was a hard constraint. Adjust the rules so when people started hoarding gold, taking it out of the banks and putting it under their floorboards. Sound familiar? They were essentially draining the government's ability to concerns many financial observers today. The Federal Reserve couldn't expand the money supply to stimulate the economy in function because it didn't have enough gold in the vaults to back that new paper. The same. The economy was strangling itself. Exactly how this is why President Roosevelt issued Executive Order 612 when Roosevelt declared a national emergency. It wasn't really about punishing hoarders or going after the wealthy. Just his third day in office, it was a cold, calculated monetary operation. Emergency was about removing the constraint on monetary authority by forcing citizens to exchange their gold for paper at the official rate of $20.67 per ounce. Legislation written during World War I to deal with foreign enemies, German spies, saboteurs, and then came the real purpose to deal with American citizens who simply wanted to protect their savings. Was a wealth transfer. You, the saver, became the enemy of the monetary policy. The Gold Reserve Act of 1934 Executive Order 6102 gave Americans from less than a month to comply. To 35 the order was signed April 5th. Think about the math of that theft. All gold had to be delivered by May 1st. Turned in their gold just months earlier. Prison. Watch there were government effectively devalued keep up to $100 in gold coins by nearly 70%. Rare and collectible coins were the gold they surrendered was gold now used in 69% more in dollar terms. What they don't know much to tell you couldn't benefit from it. Enforcement the government was almost entirely dependent more than 2,600 metric tons of gold. The federal government didn't have the manpower to go billions of dollars worth in today's prices. They didn't have the resources from private hands to the state. Every safe deposit box, of a pen, every buried jar where silver holders need to pay especially Frederick Barber Campbell was one of the most people who talk about the 1933 confiscation. He was a lawyer at gold. Wealthy, they get a critical detail wrong. He had over 5,000 ounces of gold on deposit. Who was the silver confiscation when he tried to withdraw it after the order was differently. The bank refused. It was more sophisticated. Campbell sued the bank. Executive Order 681 prosecutors immediately signed in August 1934 required the delivery of silver bullion to the government. But unlike gold, circulating silver coins were exempt. The government wasn't trying to take the dimes and quarters out of everyday commerce. That would have halted the economy entirely. They wanted the bullion, the bars, the stockpiles, the real wealth. Why? Because the Silver Purchase Act of 1934 had a specific goal to increase silver to 25% of the combined value of gold and silver reserves. They needed raw material to mint more coins and back the currency to further expand the money supply. Here is the key number. Approximately 113 million ounces of silver were surrendered under that order. The government paid 50 cents per ounce. Now you might hear that and think, well, at least they got paid. And true, 50 cents was slightly above the depressed market rates at the time. But here's the hook, the trap door. If you made a profit on that silver, if you had bought it cheaper years before, you got hit with a 50% windfall tax. The entire operation was designed to funnel hard assets from private hands into government vaults, compensate citizens with paper promises, tax away their profits, and then adjust the rules so those paper promises bought less than they did before. Sound familiar? Because that is exactly the playbook that concerns many financial observers today. Not a repeat of the 1930s in form, but in function. The mechanism changes. The outcome stays the same. Let me walk you through exactly how this played out legally, because the details matter. When Roosevelt declared a national emergency on March 3, 1933, just his third day in office, most Americans had no idea what was coming. Emergency powers gave the president extraordinary authority under the Trading with the Enemy Act of 1917. Think about that for a moment. Legislation written during World War I to deal with foreign enemies, German spies, saboteurs, was repurposed to deal with American citizens who simply wanted to protect their savings. You, the saver, became the enemy of the monetary policy. Executive Order 6102 gave Americans less than a month to comply. The order was signed April 5th. All gold had to be delivered by May 1st. Violation meant prison. There were exceptions, of course. You could keep up to $100 in gold coins. Rare and collectible coins were exempt. Gold used in industry was exempt. But here was what they don't know much to tell you in the history books. Enforcement was almost entirely dependent on voluntary compliance. The federal government didn't have the manpower to go door to door. They didn't have the resources to search every safe deposit box, every buried jar in the backyard. Frederick Barber Campbell was one of the few people actually prosecuted. He was a lawyer, wealthy, arrogant. He had over 5,000 ounces of gold on deposit at Chase National Bank. When he tried to withdraw it after the order was issued, the bank refused. Campbell sued the bank. Bad move. Federal prosecutors immediately came after him. The irony? A judge actually threw out the initial prosecution because the president signed the order instead of the Treasury Secretary as technically required. But the government seized Campbell's gold anyway. The authority to confiscate was upheld even as the specific prosecution failed. Then there was Louis Rufino, a resident of Sutter Creek, California, right in the heart of gold country. He was convicted of possessing 78 ounces of gold. His penalty? 6 months in jail, a $500 fine, and complete seizure of his gold. The message was clear. You might not get caught, but if you did, the consequences would be severe, and the government learned. When they came for the silver in 1934, they refined their approach. Executive Order 6814 came with the same threats, but the execution was more targeted. The Treasury Department actually compiled a list titled Hoarders of Silver before the order went into effect. They identified the largest commodity silver traders and major bullion holders. If you owned less than 50,000 ounces, you likely weren't on that list. The government knew it couldn't chase down every small holder, so they focused on the big fish. This was efficient confiscation. Within the 90-day deadline, Approximately 109 million ounces of silver flowed into the Treasury. Another 4 million trickled in before the order was eventually rescinded in 1938. But remember the 50% windfall profit tax. This wasn't just confiscation, it was tax policy weaponized to make holding silver financially painful. You couldn't use your silver freely. You couldn't sell it at market rates without giving half the profit to the government. Your wealth was effectively frozen. This is the template. Physical confiscation is messy, unpopular, and difficult to enforce. Taxation and regulation are clean, legal, and almost impossible to evade. Most people don't realize that gold ownership remained illegal for American citizens until December 31, 1974. That is 41 years. 2 entire generations grew up in an America where you could go to prison for owning a bar of gold. It took an act of Congress under President Ford to restore the right that had existed since 1776. Those 41 years weren't an accident. They were the time needed to fully transition the world away from commodity-backed money. By 1971, the Nixon shock had ended any remaining link between the dollar and gold. The dollar became purely fiat, backed by nothing but faith. By 1974, it didn't matter anymore if citizens owned gold. The monetary system no longer depended on it. The government had won. And that is the key insight for understanding 2026. The government doesn't confiscate assets for fun. They do it when those assets threaten the system they're trying to build or protect. Now, let's talk about what's happening right now, because the numbers are almost incomprehensible. As of December 2025, the United States national debt stands at approximately $38.4 trillion. I want you to really sit with that number for a second. $38 trillion. That is $112,000 for every single person in America. That is nearly $285,000 per household. And it's growing fast. The debt is increasing at a rate of roughly $6.1 billion per day. That's $255 million per hour. $425 million per minute. But the debt total isn't even the scary part. The scary part is the interest. In fiscal year 2025, the United States paid approximately $981 billion in net interest on the national debt. That is nearly $1 trillion just to service existing debt. Not to pay it down, just to pay the rent on the money we've already spent. 5 years ago, that number was $345 billion. We are now paying almost 3 times as much in interest as we were paying during the COVID pandemic. For context, interest payments now exceed what we spend on Medicare. They exceed what we spend on national defense. We are spending more money on interest than on protecting the country or caring for the elderly. This is not sustainable. Everyone knows this. The math simply doesn't work. The federal debt now exceeds 122% of the entire gross domestic product. We owe more than the total value of everything produced in America in an entire year. So what does this have to do with silver? Everything. In 1933, the crisis was that gold hoarding prevented money printing. Today, the crisis is the debt. The government needs flexibility to manage this debt situation. They need to be able to print money, keep interest rates artificially low, and control capital flows. Physical precious metals represent an alternative exit ramp. They are wealth that exists outside the banking system, wealth that can't be inflated away, wealth that can't be easily tracked, taxed, or controlled. I want to be very clear. I do not believe the government will issue an executive order demanding you turn in your silver in 2026. Why? Logistics, politics, and utility. There are millions of silver owners today, not just a few wealthy bankers. In the age of social media, a confiscation order would spark immediate viral outrage. And since the dollar isn't backed by metal, seizing it doesn't help them print more money directly. Instead, they are building something far more effective. I call it digital encirclement. The threat isn't seizure. It is the gradual construction of systems that make holding and using precious metals progressively more difficult, more expensive, and more suspicious. In July 2023, the Federal Reserve launched FedNow. This is an instant payment infrastructure. While it is not a central bank digital currency itself, it creates the rails for one. As of 2025, 137 countries representing 98% of global GDP are exploring CBDCs. China has already launched the ECNY. Imagine a future, perhaps not tomorrow but soon, where physical cash is phased out in favor of a more efficient, safer digital dollar. In this scenario, step one is reporting. The threshold for reporting transactions drops. Your silver is still yours. It's sitting in your safe. But its utility has been strangled. You can't use it without the government taking the majority of its value. This is the sophisticated approach. It doesn't create martyrs. It doesn't require soldiers. It just requires code. But here is why silver holders are in a unique position, and why the government faces a dilemma with silver that they do not face with gold. First, the industrial shield. Silver is not just money. It is a strategic industrial metal. More than 50% of global silver demand comes from industry. Solar panels consume 17% of supply. EVs, 5G, medical devices, they all need silver. If the government makes silver too hard to trade or taxes it into oblivion, they disrupt the supply chains of the biggest technology and energy companies in the world. Apple, Tesla, Samsung, they all need silver. This creates a powerful corporate lobby that protects silver from pure monetary confiscation. Second, the affordability factor. Gold is $4,000 an ounce. It is an asset of the wealthy. Silver is $66.6 an ounce. It is the people's money. Confiscating it affects a much broader slice of the voting population. Third, the supply crunch. Silver has been in a structural supply deficit since 2021. For 5 years straight, the world has consumed more silver than it has mined. The shortfall is nearly 800 million ounces. Above-ground stockpiles are draining. And because 70% of silver is mined as a byproduct, miners can't just turn up the dial to produce more when prices rise. This fundamental reality, scarce supply, critical industrial use, and monetary history, makes silver a very stubborn asset to control. So, what do you do? The 1933 confiscation taught us that rules can change overnight. The digital encirclement of 2026 teaches us that the mechanism of control is evolving. If you own silver, you need to think strategically. Understand why you hold it. It is insurance. It is wealth off the grid. It is the only financial asset that is not simultaneously someone else's liability. Diversify your storage. Don't keep all your eggs in one basket. Consider international storage in jurisdictions with strong property rights. If the rules change in the U.S., having assets elsewhere gives you options. Focus on privacy, legal private transactions, building relationships with local coin shops, understanding that in a digital world, anonymity is a premium asset, and know the tax laws. Be a sophisticated investor. Understand capital gains rules, reporting thresholds, and estate planning. History doesn't repeat, but it rhymes. The melody from 1933 is playing again. We hear it in the debt numbers. We hear it in the calls for CBDCs. We hear it in the emergency rhetoric. Silver trading today around 66 represents a vote against that system. It is a claim on real value in a world of infinite paper. The Americans who were prepared in 1933, who had diversified, who saw the writing on the wall, they survived and thrived. The ones who assumed it can't happen here were the ones left holding worthless paper. The specific risk today is different. The mechanism is different. But the principle is the same. Systems that seem permanent can change rapidly when pressured. Rules that seem fixed can be rewritten when convenient. And wealth that exists only as numbers in someone else's computer is wealth that exists only at their pleasure. Physical silver, sitting in your possession, requires no password, no electricity, and no permission. It is just metal. Eternal. Valuable? Yours. Maybe that's worth something in your portfolio. Maybe in the years ahead it's worth everything. Stay informed, stay engaged, stay curious,